Good morning, everybody. Happy Thursday. It's April 25th, 2024. Great to be with all of you today. My name is Bob Lang, and it's time for our daily bites. And sorry, we're getting started off a little bit late this morning. I had to check out the first look GDP report with all the price index numbers, and boy, was it ugly. It was bad. Let's take a look. Why don't we just take a look at that and get this out of the way first. What I want to point you to right here, core prices 3.7, expected at 3.4, and then last reading in fourth quarter was 2%. So almost a doubling in the jump of the core prices in the quarter from fourth to first quarter. GDP estimated at 2.5%, much more disappointing number at 1.6%. I think the Atlanta Fed, New York Fed, nowcasting, and St. Louis Fed all had it somewhere between 1.9 and 2.4. So a huge disappointment there. GDP price index, which is called the price deflator, also hotter than expected at 3.1 versus 3%. GDP sales missed quite a bit. So did real consumer spending, 2.5 versus 2.8. I'm a little bit shocked at how low this is, considering we've had some really good retail sales numbers for the past couple of months, but maybe that'll be revised upwards. Retail sales, retail inventories, ex auto, down quite a bit. So obviously building inventories, and you see the wholesale inventories down. So building inventories did not contribute to the gains that we saw in the first quarter. So what it all adds up to is this. There's a word to call lower growth, higher inflation, and that is called stagflation. So this is a report that reflects stagflation right now in the economy. Now, is it going to last for 2 quarters, 4 quarters, 4 years? I don't know, right? But this quarter right here is represented stagflation. Pretty much is the indication of what the performance was for our economy in this quarter. Okay, stagflation. When you have higher inflation, lower growth, that's happening now. We know that the jobs market is still pretty strong, and we'll have another jobs report coming up in about a week. I believe on May 3rd. It'll be coming up. That'll be right after the Fed meeting. Of course, don't forget, Fed meeting is starts next Tuesday, the 30th of April, and it concludes on May 1st. We don't expect to see any rate hike or rate cut, any movement at all. In fact, I suspect that this report takes the next 3 meetings off the table. Now we have 6 meetings left to the end of the year. We have May, June, July, September, November, and December. So we have 6 more meetings left. And as of yesterday, the market was pricing in maybe 1.5 cuts by the end of the year, by December. So, when that cut happens, who knows? But 1.5 cuts, that's it. And I suspect that maybe that half cut is going to be taken off the table from this report here. It's pretty hot. I'm not going to mince any words here. I've said it a few times already. It's a hot report, and we'll have to see what happens next month. And of course, tomorrow, very important personal consumption expenditures report, which is a monthly report that comes out. We'll be seeing where prices are at for the month of March. And it'll be interesting to see how the market reacts and responds to that. Again, prices have been starting to rise again, and the Fed has to be noting what's happening, be noticeable of the effect of higher prices. And I suspect, all right, you heard it here first, that the market is going to start pricing in rate hikes down the road. Now, it doesn't mean the Fed believes a rate hike is coming, but I think the market, the Fed funds futures market, is going to start pricing in rate hikes again. Rate hikes. Cuts are already being priced in, or they're being taken off the table, but much more so, market is going to be pricing in rate hikes. And when the market starts pricing in rate hikes, it's not good for the stock market. Okay, we have seen a rise in yields as well across the term structure of interest rates. We've seen 5s, 10s, 20s all rising up. The 2-year yield tagged 5% last week. So if we stay above that 5% level, you can really understand why the market is going to be concerned and start pricing in rate hikes down the road. And we even had a couple of Fed governors, Mickey Bowman being one of them, saying that we could certainly see rate hikes down the road if things don't improve, right? She's the first really Fed governor who's actually said that it's possible we could have rate hikes coming in and not just rate cuts and not just staying higher for longer. So if inflation just continues to rise up here, the Fed can't sit there and do nothing, right? So we'll see what happens. All right, so that's that. So let's talk about the chart here for the S&P 500. Looking like we were rebuffed at the 50-day moving average. We were making a run up there to the 50-day moving average the last couple of days, but volume wasn't that great on Monday, and Tuesday was much better on Wednesday. But of course, Wednesday considered a distribution day for the markets, and we're going to have another one today. Obviously, big earnings came out last night from Meta, IBM, Ford, Chipotle, Lam Research, and Align. So and some, but obviously Meta is the one that a lot of people are focusing on right now, and we can see here that Meta is down about $80, roughly 16%. We see Apple down a little bit. We see Amazon getting hit pretty hard. Microsoft down 10. They're going to report their earnings later on tonight, along with Alphabet, and that's being hit hard as well too. Nvidia was actually up a little bit about 45 minutes ago, and now it's down 11. So some of the semiconductor stocks are getting hit as well too. So one thing that we're seeing in this earnings season is after a really strong first quarter for the markets, the S&P 500 was up 10% in the first quarter. That is on an annualized basis, that would be 40%. Now, I think it's kind of unrealistic to think that the stock market's going to be up 40% or move at that sort of a run rate with inflation where it is right now, with Fed funds futures possibly pointing towards no rate cuts in 2024, and growth now slowing, right? It's hard to believe that the market is going to grow into that level by the end of the year. So you have to expect that there's going to be some retreat over here to be some much more normalized type of return. Now the S&P 500, for its part, has been doing well the last couple of days, but it's now going to be up about 4 to 5% for the year in 2024. The Russell 2000 still on the negative side of the ledger. NASDAQ slightly higher, maybe up about 3.5–4%, and it's going to get whacked today. So, all I'm going to tell you is this: be on your toes here, be active, be proactive. Don't just sit there and be a punching bag. Remember what I said the other day about planning. Mike Tyson once said, everybody's got a plan until they get punched in the face, right? So you've got to understand that the conditions are extremely volatile right now. We're going to have a tough time getting through some resistance levels, and now we're probably going to break 5,000 again, which we did earlier this week and late last week on the S&P 500. We'd be paying attention to the breadth indicators, which were down yesterday, even though the Dow Industrials were up. The breadth indicators were still negative most of the day too. We were down quite a bit, and then we did rally back and then sold off towards the end of the day. So it's probably going to be a big, huge rout of the bulls today. So we have volatility up close to 17%. The volatility futures are actually up a little bit as well too. Gold is rising. So you have all the ingredients here for what's called a risk-off day. And I don't suspect that there's going to be any buyers coming in here to pick up bargains because of the news that came out and the potential. I know there's always the hope and the anticipation that the dip buyers are going to come in and pick up the pieces, and we can hold on to our stuff and everything's going to be lovely and rosy at the end of the day. All right. I'm here to tell you that's not reality. That's fantasy. And if you want to play in a fantasy world, fine, you're going to lose all your money, but hopefully not. Pay attention to what's happening with the markets today. Be focused. If it means taking a loss, that's what I'm going to do. I have some losses on the board right now. I'm going to take some of those off. So you have some puts that are probably going to work nicely today, but still, I've got some exposure. I've got some long exposure. You know what? I'm just going to cut it. I'm moving on, right? That's a proactive way for me to move. I'll be upset about things for about 5 minutes, and then I'm moving on. I can't afford to just sit there and be a punching bag and let the markets push me around. I'm not trying to tell the markets what to do, but I can't certainly let the market control what my accounts are doing and so forth. So hopefully that's helpful to you. Again, we have big earnings later on tonight after the close. We have Microsoft, Alphabet, Snap, Roku, Intel, Western Digital, T-Mobile, Dexcom, Gilead, and a whole bunch of others. And then tomorrow morning, of course, we got ExxonMobil and Chevron, AbbVie, HCA, and Centene, and Charter Communications, and a few other names as well too. Next week's going to be another big week of earnings. Amazon and Apple are going to be coming out and delivering their earnings next week. So hopefully you guys, take some advice from me and just play it slowly. Take some risk off the table today. Have some puts on. Have a lot of cash, and be ready for what the market throws at you probably next week. In fact, might be a good idea just to take most of your stuff off today, and just step aside and don't even play tomorrow. I mean, just wait and see what happens after earnings are out tonight. And again, if today's indication, or last night from Meta is any indication, a lot of these companies are going to be spending money, and they're going to hit the stock, right? I think some of these big companies that they're going to be reporting next couple of days are watching what's going on in horror with what's happening with Meta today, because they announced that they were going to be spending a lot of their profits on this AI thing. And listen, the whole AI thing may be great in about 3-4 years, which is what Mark Zuckerberg said. It's gonna be a long haul for them, but they think that things are going to be great. But for right now, I mean, look, stock could get cut in half very easily, and maybe it'll be a buy opportunity down around 250, 300. Who knows? So that's going to be it, everyone. Have a great day. Appreciate all of you spending a little time with me, and we'll be back on Monday, April 29th, with a couple more days left in the month. Don't forget, we have 4 trading days left in April. And April's been a negative month so far, so we'll see if the bulls can gather it together and post some winners over the next few days to at least narrow the margin that we're down for the month already. So again, appreciate everybody spending a little time with me. Oh, one more thing. Next Tuesday, April 30th, we have a free webinar coming up, free for anybody to attend. It's on our new crypto channel. TJ Nelson is going to be joining with me, and we're going to be talking about the crypto markets and the channel that he and Brian are working on. It's brilliant. He's doing a fantastic job trading and putting in some great ideas and great commentary. They're in there like 24/7. So they'll post stuff at like 2 o'clock in the morning on Saturday. It's incredible. So it's a great community that we have over there right now. I want to share it with all of you to let you guys see what we're doing over there. So have a great day. Have a great weekend, everyone. And if you guys have noticed, why did I pick that song? I'm channeling my inner Ted Lasso today. Hopefully you guys know what that means. And I'll see you guys all on Monday. Thanks. Bye. Search you